Let me welcome A. Balasubramanian, MD and CEO, Aditya Birla Sun Life. Good morning, Bala. Thanks for joining us.
Yeah.
Okay, so my first question is, how stressful is this stress test for mutual funds?
It's not that stressful given the fact that we have been working on this stress test discussion for quite some time. One as an industry body, there is a committee at AMFI which is comprising of CIOs and equity, head of equity. Have been working closely with the risk management team of respective fund houses. There is a two committee that we ran. And every time we look at anything that comes as potential steps on us to take to highlight the risk associated with the mutual funds, as you know, that mutual fund players have been, of course, saying for quite some time the risk in smaller mid cap, given the fact that the price has been quite substantial. Therefore, valuation would have gone out of acceptable level. Therefore, one has to manage the risk. Also, given the fact that huge amount of participation has come in this segment of the market. Therefore, often we revisit the risk associated with such kind of movement. And the number that has been being disclosed today, this has been tested multiple number of times on the basis of what has been guided. Assuming on a pro rata basis, you have to sell if there is a redemption of 50%. Assuming you have to sell on a pro rata basis by 28%. Then what the kind of number of days will take to liquidate, which is nothing but a stress test. But in fact, in reality, it doesn't work that way. I think in reality, when money managers liquidate the assets, when there is redemptions, first he sells what he has, he uses cash, then he looks at other assets which are sellable, then he looks at fundamentals of the company's basis which he sells. And also this doesn't take into account the price. There are liquidities in the market. At what price you will see the liquidity of the companies will rise significantly. If there is a price fall of say 10%, there is high probability the volume of the companies traded also will go up by 3-4 times, though there is no evidence for that. But normally happens in a price fluctuation. Therefore, I would say that while it is the responsibility of the industry to highlight some of the risk associated with this kind of portfolios by giving these kind of numbers, but it is not something new to us. It is already being monitored internally by the respective risk management team of the AMCs. So now that it is coming in the public domain in one platform, this is something probably I would say is new to the industry. And it's again first time it's happening. Probably I would say this would be a welcome step in that manner.
Right. Okay. So from an investor's point of view, let me take this. We are looking at 10 days to liquidate 50% of your small cap portfolio. What does it mean for me as an investor?
It's only one number you have to look at. From investor's point of view, no investment is being made on the basis of the stress test. The investment is always being made on the basis of the segment of the market you make an investment, whether it is large cap, multi cap, mid cap, small cap. And then what is the purpose for which you are coming, which is a long-term investing. I think every investor, after taking into account these stress test numbers, whether he can get worried on the basis of this, doesn't need to get worried as long as his investment time horizon is about 3 to 5 years. In general, most of the investors who are coming in the small and mid cap space, they are not looking at short-term gain of about say 3 months or 6. Somebody coming for 3 to 6 months and then looking at putting a large pool of money, definitely I would discourage not to choose these kind of schemes, going by the stress and so on and so forth. As long as he has a very clear thoughts in his mind that yes, I am investing money not for 1 year or 2 years, I am investing for the 5 year, then naturally these numbers will look one of the number they have to pay attention, but not necessarily they have to base the decision on the basis of this.
Right. So the stress test in reality comes into play only when there is a big market crash. Am I right?
Basically, I think in the risk management practice, I always say 1/100th of the event happens, then what will happen to your portfolio? So, and what will happen to the economy, right? There's always a discussion which Nassim Taleb always keeps harping on it. And at the same time, from market point of view, if there is a significant fall, if there is significant redemptions, so the assumption that is being made as we see inflows coming in, we also seen a period of where the redemption also comes. But given the fact the size of the market is becoming larger and the inflows actually is much larger than the outflows, and so far that's been the trend. This is only an indication that one has to just pay attention. If the trend reverses, whether there's been a risk associated with these kind of portfolios, if at all if it exists, then what kind of risk one should pay attention. That is what I think it is all about. This test is talking about it. Also, the stress test number is derived on the basis of your portfolio will be liquidated on the basis of the pro rata basis. Say, as I mentioned earlier, say normally when money managers liquidate, he doesn't go only by the pro rata, he goes by that moment, whatever the quantum of redemption could be there, to the extent he sells, he can choose from anything that he has in his portfolio. That's something one has to just keep in mind. And second is, we also look at another column where we are given more information, which is related to how the portfolio is constructed.
Yeah.
In the sense that how much is the large cap, how much is the small cap, how much is the mid cap. They'll also how much is in cash. All the four components are given. They'll also give you a sense in terms of how the portfolio risk, in addition to the stress test that you have to look at it, how those numbers also should be taken into account from an investment decision being taken point of view. But again, coming back to the same point, that investors' point of view, this has to it's a better decision that we are giving. At the end of the day, need not be necessarily this information should be used for the purpose of taking a decision, as long as your investment is actually for a longer time horizon.
Right. Okay. So one more important question. So as a fund, when I invest in a small cap fund, my aspiration is to make bigger returns than in a large cap fund. Now, your challenge would be to make sure that you meet my aspiration, number one. Number two, you also have to meet the stress test. Now, in such a situation, what is the percentage of cash that you would keep? Would you keep cash because there are no investment opportunities, or would you keep cash because the investor will come and redeem?
I think normally this will be largely done by fund manager to fund managers, the view that they take, because view can vary from one to other. And second is, what is the portfolio objective that has been defined in terms of overall asset allocation. And second is, up to what extent they can take money in these schemes so that they can manage the portfolio much more effectively without getting caught into any of the companies which could probably having some of fraud in that. That's something which may come as part of the overall portfolio management styles and the risk management that one has to follow. But having said that, one should also remember, I think if you look at the small and mid cap as an index, have gone through the cycles. There are periods where it has given a significant higher return. I think if you look at 2019 period, it gave a significant fall in the market. Again, since then, from COVID, if you look at this segment of the market, has given substantially higher return than the broader market. I think what remains to be, what one has to pay attention, that will be the behavior of this segment of the market. It has, the swing factor could be very, very large, given the fact that the liquidity of these companies could be relatively lower compared to the widely owned companies. In the smaller mid-cap companies, we can't expect the wide ownership, given the fact that in a limited market cap, only so much of ownership can be taken. And keeping this in mind, this volatility that you have seen in the past may also occur in the future. As long as the investment that you're making for a longer period, you have to live through the volatile period, despite all those noises would come, which could be discouraging in nature. But as long as I have in my mind very clear that I'm making the investment for 5 years and 10 years, that is where I think the real benefit for the investors will come.
Okay, so this is assumed importance simply because valuations are peaking. All of us know that valuations are peaking. Will you stop any additional investment in small cap and mid cap, because the challenge of finding good value stocks is going to be tough, right?
So I think stopping flows and the flows at all depend upon what is the size that you manage. In fact, we as a fund house are now stopped it, continue to encourage people to put money through the SIPs, and given the fact we have about 600 crores kind of size. And second is, within the space, you always find opportunities which are which in the space. There are companies which are even the current market not sufficiently re-rated. You'll find the companies earnings potentials increasing. Therefore, that's something will be an ongoing exercise. It's very difficult to actually make a judgment that valuation is costly in every company. All, of course, will be varying from company to company, sector to sectors. And as we have seen in the last 1.5 2 years, and most of the value companies suddenly got to discover their value. Therefore, they have been a significant outperformer. I think we'll have to be with this market on these kind of cycles. Making a generalized statement that valuation is costly, therefore I would be careful is something which money managers will not do it fully. Given the fact within that space, they will always try and find companies that are investment worthy to generate in the long term. Of course, as long as they get a success, anywhere between 55 to 65%, I think we should be happy with that.
Right. So one last question, Bala. How do you evaluate your own stress test results? What is your target? Would you aim for reducing the number of days further? And to do that, what is it that you need to do?
So, of course, in our case, we monitor it at Aditya Mutual Fund. We have been undertaking this exercise for the last 20 number of years. Is one of the factors that we always put while evaluating the money managers. The return on one side, we monitor them with respect to the peer group as well as to the index. Second, what kind of risk you take on a portfolio constructions, taking into account the liquidity, ownership, and how much you own, and so on and so forth. The exercise that we undertake, in fact, we as a fund house, since we monitor it very closely and review it at a regular interval, both through the IC as well as the fund manager review level. So we are a lot more in a comfortable positions as far as this test is concerned. In fact, I don't want to say that we are the lowest. At the end of the day, these numbers can vary from time to time. But definitely something we monitor very closely. Even fund manager, while taking a risk, he does pay attention to these numbers, and basis which he also, of course, builds his position in the fund. Taking this into account, this is a broader principle that we have, how the risk has to be managed. But sometimes, of course, given the fact that money manager actually is a better judge while making investment decision, we leave it to the choice of the money managers as long as he has to deviate from these numbers. So we don't have any hardcore number per se, but definitely the monitoring definitely helps in knowing them the mirror, and basis which he can always take a decision.
Okay, so I will not take the name of other funds. We have got stress for some of the funds. The number of days are exceeding 20, 25 or 50% liquidation. Is that a very high number? Is it something that we need to worry without taking the names of other funds?
Again, we have to look at it, because anything which is, the moment you put the number, somebody will always look good, somebody will always look bad. But given the fact that the ultimate investment decision is based on the base of the performance of schemes, the way you manage the money, the way you manage the risk, as long as one is able to draw comfort in all the 4 or 5 parameters, and the fund house that is actually has been in the business for multiple cycles and seen the cycles and yet grown in their size. So all of them, I think, would matter when it comes to the question of taking a decision. Therefore, I would not make a sweeping judgment that somebody's 24 is worst and 4 is better. I think that is not the way to compare. It's only the number one has to just see. It is like P multiple, say 7 is always good and P multiple 25 is always bad. You can't make the judgment given the fact we have to look at the context of what are the earnings potential of these companies and what is the vision of this management for taking the business to the next levels. There are many factors one has to, of course, take into account. Therefore, the simple number judgment, anybody can make a judgment on the base of the higher or lower number, can make the judgment. I don't think one can make that kind of judgment while taking decision.
Right. I think, Bala, you're being modest and humble. I think 10 is better than 27 in this case. I must thank you on that note. And as Bala says, there is no stress to take or worry about the stress test. You need to be cautious about this. It's only in a situation where you have sudden redemption or volatility that you need to worry about stress test. Thank you so much, Bala, for joining us. Thanks again.